Well, the first thing we saw in the first 24 hours was 15 executive orders were signed. He got rid of any travel bans. He delayed student loan payments and interest payments until September. He delayed eviction moratoriums for people who are having trouble paying their rent or their mortgage until the end of March. He also required masks to be worn on federal properties for the first 100 days. He's committed to putting out 100 million vaccinations by June, and he's asked the country to make a sacrifice and wear masks for the first 100 days till we get the vaccinations really rolling. He's rejoined the World Health Organization, rejoined the Paris Climate Accord, stopped construction on the border wall on the south end of the United States, and canceled the Keystone pipeline from Canada to the United States. So it's really been a whirlwind in the first 24 hours. He signed a tremendous amount of executive orders, Maria. And as it relates to the stimulus, he's really going big. And the market has liked that. And you've seen it in the last couple of weeks since he announced the package was going to be in the trillions of dollars. The price tag that he put on it was $1.9 trillion. And if you put this in context, Maria, this is really a big package, a big package for sure. Over $1,400 checks will be going out to lower income individuals and their children. So a family of four, if you couple that with the 600 they've already gotten in the recent $900 billion package, that could be as much as $8,000 per family, which is a very, very big package. So it's just the beginning of massive stimulus, Maria.
Yeah, which is just good for the recovery economy in the United States. But how the investor react in the capital market regarding the inaugurations of Biden's? What kind of the optimisms that investor waiting for?
Yeah, well, you've certainly seen it. So the market's been rallying. It was the biggest rally from an election to an inauguration that you've seen in history, I think close to 14%. And the market is saying, listen, you know, we've had monetary policy for many years, and now we've got massive fiscal policy kicking in. If you do the math, the original CARES Act last year was $2.3 trillion. Then we just passed a $900 billion package. 400 was rolled over from the CARES Act that was unspent. Now you've got another $1.9 trillion with $350 billion going to state and local governments. And after this, they want to do another $2 trillion climate and infrastructure package. So if you add it all up, you're close to $7 trillion. And keep in mind, COVID, the impact of COVID on GDP was only about negative 3.5% GDP in 2020. That's about $750 billion. So, you know, $7 trillion of fiscal spending for a $750 billion problem is a tremendous amount of spending. And you're seeing that reflected in the stock market and in bond yields. So the market is optimistic in some sense that there's a lot of support coming. But on the other hand, you're seeing bond yields start to rise.